Hello everybody, welcome back. Let's have a look at the state of the market. It's Monday, so we've got the rest of the markets have just opened or beginning to open. And we'll start with Bitcoin. We'll have a look at the Dixie and S&P futures market. So Bitcoin so far closed yesterday below this temporary support. So but since we've closed down below there, we had a little bit of a wick above there so far on the daily. Still down below, so I think that this more or less seals its fate to move down towards the bottom of this descending trend line, which is part of this falling channel. And with that, we should expect a bounce, maybe even a reversal from there. The time, for this fourth quarter resurrection of crypto and all of markets would exist, I suppose, in the fourth quarter. That was always the end of the summer. We've just seen the end of summer. That's it. Summer has ended. The summer consolidation. But I suppose price action doesn't particularly care so much about the exact time that summer ends. It's always been a bit of a guide, which is why I think we're still going to head down first, and whether we get supported here to move back up is a different story. My expectation is that a bounce from here is at least expected. Whether it reverses, we don't know. But still, down is most likely the scenario. The 50 simple moving average has crossed above the descending trend line as well. That gives you a price of 53,477. 200 exponential 54,222. So a fair bit of support around this area, but if it gets lost, again, just to reiterate, if it gets lost, increments on the way down. First to be about 44. Then probably down to around, since the weekly's closed higher, we're talking areas on the chart of 36,650 and, 39,000. Nice. Okay, fair enough. That's relatively nice. Momentum. Money flow index is twisting up a little bit. This is still the significant low so far, which means that if we do get a candle body low, which is again, 52,300, if it were to hit the bottom of the trend line, that would be considered bullish divergence if the weekly candle closes down there. That's one of the things that we're looking for. That is more or less one of the main things that we're waiting for here. Getting the main drive. Bang, bang, bullish divergence, up, up and away you go. Marks the end of the bear market. Does it again here on that consolidation throughout 2019 into 2020. Bang, even got the crash, and so on and so on and so on. So it's relatively good. They're far and few between these signals and setups, but they do exist and they are quite useful. We could even launch all the way up to the top and then see a big pullback down there. That would still be a valid setup. Look, I don't know if you know, but when you're trading or even looking at charts, for instance, there is no one direction. You know that, right? There's so many different ways it could go. I always say projections, not predictions, expectations, not calls. We don't know. Nobody really knows. So that is your Bitcoin situation for now. Same as it has been for a little while now. Down, maybe up, and maybe down again, and down, and then up. Who knows? But in the short term, down. Over time, this is a consolidation. It should break out and break up and go to new highs, really. New all-time highs. And that should carry the majority of the market with it. So let's just have a think about the majority of the market, being altcoins, for instance. This is still a massively bullish chart. Golden cross, trend. First major area of resistance on the dominance chart is around 58.5% dominance, marking off this significant area and this big breakdown. It's not the best thing you've ever seen. But it is an area that I would be focused on. It's also the top of the weekly Bollinger Band as well. So an alt season may exist at this level, or at least a significant alt rally that could take you down to either the 20 or the 200 or the 200 simple. That'd be great. That would be considered alt season to me. If we break out and continue up, which is a possibility given what we're looking at right now, let's just say that consolidation ends for Bitcoin and Bitcoin rallies to a new all-time high and leaves altcoins behind, it wouldn't be at all surprising to see us move up to 63.5% dominance. That'd be a much better area. We've got bang, bang, we've got supports, we've got breakdowns, and we've got another big breakdown here. So that area would be an amazing place to see a Bitcoin rotation, and probably a way better, longer lasting, significant alt season. And look, if we see a move up towards that, that's it. I'm taking some Bitcoins out of cold storage. I'll be putting them in some of the more safer trades, higher liquidity trades. But that is the setup. That's what you'd be waiting for. This would be good. It's worth a shot. This would be amazing, and it would look similar to this, and prior to that, similar to this. That's what it would kind of look like, and that's where the altcoin market goes parabolic, and it has done that from just interpreting the dominance chart as a rotation area. Right, so that would be a dominance chart. Now let's get into the real boring stuff. Real boring. Let's start with the S&P futures market. So this is S&P. We've got bearish divergence has kicked in now on this last candle body closure on the weekly of last week. So we've got bearish divergence, money flow index, bearish divergence, RSI, another drive down here, RSI. It is ready to come down. So this is my big fear of the crypto market, is that the correlation, at times, they're not correlated, but in downtrends, they tend to be correlated. But Bitcoin crypto is a risk asset. S&P is an up-only chart, but if that goes down and starts to come down in larger increments, so first being back down to the 20 and 21 exponential, it's a 4% move. If it makes its way down to the bottom of the Bollinger Band of the 50, that's a 9% move, and perhaps maybe, just maybe, we do a 22% move down towards the 200 simple and exponential moving average. And that would be significant on the S&P. It would still be structurally intact, continue to move up from there, as this bear market did that also. Bang! All the way up. So we could be looking at something like that. We've got enough reads on this weekly to suggest that that is a possibility. So we shouldn't say, it can't ever happen. It could. It could happen. Remember all the stuff that's going on in the world? The Black Swan events, everything like that. Oil has come back down again. It's come back down quite significantly, in fact, back down towards the trend line, this descending trend line, which was all part of a descending triangle formation, which we have broken out. We've retested the supports here and again here. So as much as we are below it, and again, oil is messy, right? There is no, you can't just say oil will move up from here or it will break down from here. We all want to be able to call the exact, perfect, to the cent price action for anything. I'm looking at oil here as an opportunity to go long on, really. And that would require some probably incremental buys of futures. You don't go all in at one place. 100x leverage on oil. You don't do that at all. You start here, and if it dips down a little lower, you put a little bit more in, and if it dips down below these areas, then you get the hell out, because it's wrong. You failed. This is technically a bearish looking chart, but the formation is bullish, and you know what I like about it? It's not so much the chart, it's about the implications globally of what's taking place in the Middle East. There's a lot going on around there. Also, the inflation situation for the rest of the world, especially America, which is kind of struggling a little bit to get its inflation down to 2%. It's close, and people are talking about rate cuts, which I think is crazy. If we see this move up, and again, we're talking economic warfare here, if we see this move up, and we see inflation move up, and I think oil is getting ready for a nice big push up, really. If we check the monthly, what we see is a 200 simple moving average being supported here. We're talking high term time frames, right? This is the monthly chart. We see a monthly break from here. We see increments up towards, first of all, 83, 93, back up to above 100. This could be where we go over this next 12 months or so. And remember, this is a lagger, so if you're thinking about inflation, we're talking lagging inflation. Usually a month to 6 weeks behind oil's price action. At the moment it's still coming down, so it does look like what we should be seeing on the next CPI is as expected, maybe not lower than expected, but if we start going up and up and up, and remember inflation is lagging, well, this time next year, once the cycle has finished, I would say, we'll be back in the same 2022 situation. And big bear markets. So look, I call these sort of situations in markets a train dodge. This is a very slow train dodge. It's more like a tram dodge. We're looking at things on a monthly, trying to work out where we're going to be a year from now, and it looks to me like there is a chance that we'll be going into another big bear market globally in a year, which should be okay to consider the rest of the crypto market an intact cycle so far. So let's have a look at this holy magical crypto chart, which is your total 2. Expectations still intact. As we were saying, summer consolidation still consolidating. Babada. We had this dip on the previous cycle, and then we curled up and moved over. At the moment, we're not curling anywhere. We're still heading down. So if we do really just crash down, let's just say that Bitcoin moves down to that 200 simple and exponential. Remember, this total 2 is diluted with obviously all the altcoins in the world, but stable coins as well. It's a 19, almost 20% move down to that major area of support, which would be down here, and the exact number would be roughly $668 billion market cap. Opportunity, really, because that would be a significant area that has seen resistance, support, and then hopefully support, and then ricochet back up to new all-time highs. As far as the time of the cycle is concerned, it's appropriate. This is fine still. And again, we've got a rough direction. It's not perfect, but you can see the correlation is relatively good to say that this cycle is more or less working as the previous one did. There has been anomalies in the last cycle, such as this big crash down after what happened. And then the money printers turned on, making it go parabolic quicker. I'll be looking at a direction generally more like this. So let's just say that we start to break out around here. That would be the general direction. So we're talking October 2024 should be seeing a breakout. So I'm looking for a move down, and if you do get a move into this 665, 6, 7, 8 billion, relatively decent support to assume a move from there. And finally, we'll look at the Dixie, because this is a very long, boring video. I'd be surprised if you made it this far. If you have, let me know in the comments. So, look, if Dixie was going to move, it was always going to have a move from the 200 simple moving average. It's a golden cross on the Dixie on the day on the weekly here. I don't think it's ready to break down below this level, although I could be wrong. It could, but at the moment we haven't. I'll be looking for a move back up on the Dixie, and hopefully a move up towards 104, where we get rejected from there. That takes us down over a prolonged period of time into this trend, the trend line down here, which is a rising channel. Which technically is a bearish formation over a long period of time, and this became relevant after the low was triggered in May 2011. So it's been going on for like 13 years now. It's a long trend, and it's an uptrend with significant highs and significant lows, and I think that we're going to find the low before we hit the next high. When the low gets hit, we're on borrowed time, as we were back in 2021. Bang, bang, bang. And then obviously the reality of the dollar rally kicks in. Cowabunga, baby. All the way up to significant read over here, which marks kind of getting close to the end of the bear market. So it's a carbon copy of last time, isn't it, really? It's exactly the same. So with that, I am more relaxed than your average trader, I imagine, because I've kind of projected all of this a long time ago, talked about the summer consolidation back in December. So obviously all of this is nothing more than just expected moves. And then the next expected moves would be up, sweeping up and moving up higher, whether it's from this level or this level. I'm not entirely sure, but it's still by projection. Moving into a brand new all-time high for Bitcoin and crypto this time next year, really. It's around September next year, September 2025. I'm looking to see the peak. So nothing's changed. I'm looking for creeping down, and whether we hold here or break it, we'll have to monitor the situation as we move forward. But looks okay to me as far as my expectations are concerned. Let's just see how today pans out. Monday, until traditional markets open at 2:30 later, I couldn't really tell you exactly how the broader markets are going to behave, but remember, we're looking at this on a weekly. Everything seems okay, really, as far as everything I've said since December, last year. Right, thanks for watching. Hope you have a nice day. Take it easy.